Stephen Krebman, distinguished guests, ladies and gentlemen, good afternoon. It is indeed a pleasure to be here with you for this year's Asian Insurance Forum. I hope you are enjoying this lunch break after today's full morning session. I'm sure there is much more to come in the afternoon. This high-level forum serves as an inspiring platform for exchange of ideas on many issues relevant to the insurance industry. From the current state of global economy, global financial markets, to ESG and DEI, diversity, equity, and inclusion. And from insurance interface with Web3 to Hong Kong's prospect as a risk management center, I'm sure this forum is a much enlightening occasion that will inspire new ideas, collaboration, and businesses. The theme of the forum is striving for enhanced global financial stability and resilience. The chief executive and many distinguished speakers have shared their insightful perspectives on a wide range of issues. Now, please allow me to take the next couple of minutes to update you on how Hong Kong is doing on our financial stability and resilience, and share some observations about the development of Hong Kong's insurance industry. As it nears the end of a momentous year, the world has found itself in a challenging global environment filled with complexities and tensions. Slower economic growth, higher for longer interests, and supply chain disruptions caused by geopolitical fragmentation. But despite these challenges, we remain highly confident with the financial stability of Hong Kong. Over the years, we have withstood trials and tribulations time and again. We have worked unceasingly to build robust regulatory framework and strong buffers, maintaining a high degree of resilience to absorb shocks. To this end, the government has established a high-level cross-market coordinated round-the-clock surveillance system covering all sectors of the financial market so that we could detect looming risks. And I'm glad to tell you that despite the volatility in the financial markets, there has been no untoward volatility. But beyond maintaining the stability and security of the financial system, it is through consistent developing and enhancing our financial markets that we could further strengthen our resilience. And we know that in a highly competitive world of finance, we must not stop improving ourselves so that we will be able to stay ahead of our competition. Our work on this front is multifaceted. You may well be aware of the establishment of a task force to boost the liquidity of the stock market by a combination of measures. They include bringing enhancements to our listing regime, market restructure, trading mechanisms, mutual market access arrangements with the mainland, and attracting both an international capital and investors to Hong Kong, issuers included. In particular, our connect schemes with the mainland has been expanding and deepening. Now they have extended from products to more derivatives, covering stocks, bonds, ETF, and risk management products like interest rate swaps and A50 index futures. Just a couple of weeks ago, we announced that Chinese Treasury bonds future contracts will soon be launched in Hong Kong. As renminbi, RMB, is getting more popular as a trade, settlement, and reserve currency, we are also working very hard to further enhance our offshore RMB business hub status by offering more products and risk management tools to enrich our ecosystem, and at the same time, upgrading the related infrastructure. We are also making great strides to open up new markets, to attract new capital and new issuers. The ASEAN and the Middle East are burgeoning, and they have both set out plans to modernize their infrastructure, pursue green transition, and develop their digital economy. They are also looking forward to diversification, diversifying their sources of investment and the markets for their products. With the concerted efforts of the Hong Kong team and the cordial response from these counterparts, we are seeing heartening results. Last week, the first ever Saudi Arabia ETF was listed on our stock exchange. This week, indeed yesterday and today, we are hosting the first ever Priority Summit in Asia, hosted by the Saudi Arabia-based FII Institute. Prominent figures from Saudi Arabia and around the world, in their speeches and interviews with the media, have all recognized the unique attractiveness of Hong Kong as an international financial and business center in this part of the world. These are indeed very encouraging. And they all said that Hong Kong is the ideal hub in this part of the world to attract capital, talents, and a lot of different global leading institutions, because we are bridging the East and the West. Now allow me to share some observations about the development of the insurance industry here. We are among the world's most open insurance centers. 7 of the 10 top insurers globally conduct their business here. The average gross premium was over $550 billion on average over the past few years. In 2021, the industry accounted for about 3.6% of Hong Kong's GDP. Although after some setback in 2022, the insurance industry is seeing strong rebound this year. In the first 3 quarters of 2023, new office premium of long-term businesses recorded an increase by more than 30% compared to the same period last year. The increase was particularly impressive in the area of demand for whole life and critical illness protection. These figures demonstrate that the insurance industry has been coping well with the myriad of challenges and changes, and they also show the promising prospects of Hong Kong's insurance industry in the mainland, in particular the GBA area. We will continue to work with the mainland authorities to facilitate the industry to open up more business opportunities in the GBA. And here, allow me to highlight a few developments which may characterize the industry's development in the future, namely innovation and technology, climate change, and the social value of insurance. On technology and innovation, we have witnessed disruptions brought by InsurTech, as traditional insurers seek deeper cooperation with fintech startups and technology providers to develop new products and tools, or even new business models to service various aspects of the insurance value chain. Since we introduced the virtual insurance regime back in 2017, we have thus far licensed 4 virtual insurers, and their business have been expanding. In 2022, the businesses of the virtual insurers in Hong Kong expanded by 2.5 times compared to the year before. And increasing digitalization has driven about 80% of the insurers in Hong Kong to utilize digital channels to enhance business operations. And virtual insurers are exploring new frontiers. For example, offering products in areas that may have been left out previously by traditional insurers, like coverage for pets, dogs, cats, turtles. What's more, with digital native edge, some virtual insurers are taking further steps to innovate niche products, such as cyber insurance. Cyber insurance for virtual assets. Certainly, with the greater popularity of Web3, there will likely be ample space for cyber security insurance as new type of risks. Trends have shown that such business is increasingly shifting the traditional coverage of hardware damage and business disruptions to cover more third-party liabilities like data leakage, litigation costs, and public liabilities. On climate change, the World Economic Forum has warned that climate and environmental risks are the core focus of global risk perceptions over the next few decades. But they are also the risks for which we are least prepared. At a global scale, natural catastrophe events caused about $270 billion of economic losses last year, but only 44% of such risks was insured. In Asia, we face a much larger natural catastrophe protection gap of over 80% compared to the rest of the world. Intensified natural disasters have increased insurance and reinsurance costs, creating significant rise in the demand for alternative risk transfer to supplement the traditional reinsurance market. That is why we are very keen on developing the insurance-linked securities, or the ILS market, which we believe can play an effective role in offloading underwriting risks to the capital market. While the global ILS market has been growing steadily over the past decade, the proportion of natural catastrophe risks covered by ILS remains small, and this market in Asia, including the mainland, is very much underdeveloped. I think you know this well. With the concerted efforts of the government, the insurance authority, industry stakeholders, and mainland and overseas partners, we have so far issued 4 catastrophe bonds totaling about $560 million. That includes the recent issuance of such bonds for Chile in collaboration with the World Bank. It was also the first ILS product listed on our stock exchange. And finally, it is the social value of insurance. Let us not forget that insurance is an economic shock absorber and stabilizer for social harmony. which are important and fundamental roles that it should play in the community. We are fully conscious of this undertaking. For instance, in 2019, the government and the insurance industry together launched 2 tax-deductible insurance products, the Voluntary Health Insurance Scheme and the Qualifying Deferred Annuity Policies, to encourage uptake of insurance policy and early retirement planning. Both products have met with overwhelming response, with over 1,260,000 policies sold respectively. The momentum was reinforced by the protection-linked plan launched in 2022, with simple product structure, reasonable mortality protection, and transparent fee structure. PLP seeks to encourage the younger generation to start their retirement planning early so as to narrow the protection gap and facilitate financial inclusion. Ladies and gentlemen, before I close, I wish to take this opportunity to express my sincere appreciation to the Insurance Authority for organizing this foremost platform of open and constructive dialogue, shaping a brighter future for the Asian insurance market. My gratitude also goes to each and every one of you for the remarkable contributions you have made and will make to the development of Hong Kong's insurance industry. In such vital roles of transforming risks into opportunities, promoting innovation, and offering protection to the society. With the holiday season upon us, I wish you all a very Merry Christmas and the best of health, happiness, and love in the new year. Thank you.